Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. Online Trading Academy, the sponsor of the show, training people just like you how to trade and invest in the financial markets. That's stocks, options, futures, forex. If you're looking for an income strategy or a retirement strategy, 401ks and IRAs. If you have a 401k right now, it's probably not looking good the past year and a half. There are strategies as markets go down, and we're going to talk about that here in the next couple segments, but also strategies even if the market's sideways. And we're really seeing downward and sideways action, we'll call it, over the past several months here. So opportunities are always there. It's just how do we, us as average investors, the public, how do we take advantage of those? And we have investing classes at our local academy here, locally here in Bloomington, state-of-the-art facility, a couple different classrooms. Matter of fact, 3 classrooms where we got people in every single week and training about the markets, how they work, and how to make smarter investing decisions. Text right now to the for 2 seats for a free class. Text the word investing to the number 210-210 if you missed that on that last segment. Text the word investing to the number 210-210 for 2 seats and the Financial Quick Start Kit, which will actually help you get started right away. So we were talking about in that last segment a little about they's banks. They're in turmoil this week. JP Morgan even showing a lot of weakness. I mean, that's probably one of the bigger ones, right? You got Citibank also showing some weakness, but there's some broker platforms that are showing some major weakness as well. Charles Schwab being one of those. Charles Schwab, over the past week or so, down about 25%. Now, a lot of our listeners are probably saying, hey, that's a great buying opportunity. Well, you don't want to just try to catch a falling knife, for one. But there potentially could be some buying opportunities. Also, with volatility spiking, there's opportunities to collect premium through options. And basically that's a strategy where hopefully the price doesn't get to where you would like to get in, and you get paid a premium. Right. And if you get the stock, you still collect that premium. So essentially it'll lower your cost basis. So we'll talk about that coming up as well. But Schwab is down big time. One that really kind of confused me a little bit is you would expect with Roku having a lot of money invested with Silicon Valley Bank, they didn't see much of a drop. They've seen a slight one right at the beginning of the week, but not as much as you would think. And that could be because they're, quote unquote, getting bailed out.
That's correct.
Right. So there's another stock that I really want to ask your opinion on, Al, is Caterpillar. Caterpillar, over the past week and a half here or so, well, really from the highs of January 26th down about 19%, depending on when you listen to the show here. So is that because of interest rates, or is Caterpillar going under? I mean, I doubt that, but what's going on, and why do we need to understand how supply and demand works in the markets so our opinions don't really matter? You base your decisions off the charts.
Right. Yeah, Caterpillar, it had a really nice run. It may be that it was just overbought. People had a lot of profit that they wanted to take. And when we see this kind of volatility where there are going to be periods of time when the market goes down, the smart investors out there know when to take a profit. And they know also when anything, regardless of whether it's the market in general or individual assets, if it looks like there's going to be say some profit taking, they can always short that stock too and make some money on it as it goes down. Typically what happens then as they start to cover their short positions. And by the way, we talk about these things in the class. I don't want to confuse people, but basically they may be selling shares of CAT when it reached its peak with the intent of buying it back at a lower price and returning it from whoever they borrowed it from. That's covering their short. That will cause the market to go back up again. But you know what? It could be interest rates. Now, as interest rates go up, CAT, companies like that have huge expenses in their equipment, they're relying on low interest rates to really boost their profits. And that whole environment with interest rates has changed a lot for a lot of companies. But here is the bottom line. We talk about these big moves up and down, and the problem I think that a lot of retail traders have is that they spend way too much time trying to figure out why that's happened and what to do because of the fact that there's a movement there. Yeah. And the real I hear, to keep it real simple, think about this. If you were Costco or Sam's Club, how would you run your business? And the way that they do it, the way they're successful, is they know where to buy at low prices. and they know when to sell at high prices.
Which
It's the same thing that you do in the markets.
Sounds a little bit like wholesale versus retail.
Exactly. And look at Costco. If you go into Costco today and then go back there a month from now, you'll find a lot of the inventory has changed. Why is that? Well, because they go out and they look for things that are on sale, good things that are on sale that they know they can mark up and sell. The same thing is true in the markets. The only thing is that you just need to know not why something moves. That's not as important as when it's going to move and how you find that on a price chart.
And when and how far.
When and how far. How far is the profit? And that's important too. Look, there's three components to any kind of a trade or investment. One is the entry, and then there's two exit positions. One exit is with your profit. How do you make sure that you're protecting a profit and not letting it be taken away? How do you make sure you're not getting out too soon and missing out on a profit? That's part of our strategy that we teach you. But the other exit is if you're wrong. And you will be wrong, and you don't have to be right all the time. I mean, successful traders, if they're right 40, 50% of the time because of their reward to risk ratio, they're very happy with that. So this isn't kind of a thing where, like as a surgeon, for example, you want to be right 100% of the time as close as possible. But as an investor, trader, you don't have to be successful nearly that much. But it's understanding what you see on a price chart, and everything you need to know is there. It's not necessarily what the asset is, what the company is, or how good or how bad it is. It's where is the opportunity for you to benefit by trading or investing in that particular asset.
Yep, and it really comes down to a couple things as well, odds and probabilities. And that's just like, if you have the odds in your favor and the probabilities in your favor, the likeliness that that's going to work out is going to be higher if you keep stacking those odds in your favor, keep stacking those probabilities. And that's what our strategy is designed to do. It's designed to stack those odds in your favor. And as you were talking about, very, very low risk with much higher reward. And that way you don't have to be right every single time. A lot of people think you have to be right 5 out of 10 times. Well, if you have proper capital management, you can be correct much less and still be just fine.
Correct.
And that's what we're going to introduce you to is how to keep your risks small in the market and your rewards higher. And you mentioned something really good I wanted to just kind of clarify as well, is you have wholesale and retail. You have Costco or Sam's Club buying at wholesale and selling at retail. That's exactly the same thing we want to do in the financial markets. And wholesale would be demand. You want to buy when a price is in a demand area.
That's where the buyers are.
That's where the buyers are. And you want to sell at retail, high prices.
Where the sellers are.
And that's supply and demand at its finest. And that's what we identify on a price chart, is where that supply or retail area would be and where that demand would be, which would be that wholesale area. And it's zones. You don't have to pick the exact right price. It's an area of interest. We're going to talk a lot about that in these investing classes that we do here locally. These classes are about 2 hours long. We've been having a lot of people come into these classes. It's been good. It's been a lot of fun in these classes, meeting people that have been trading for many, many years and looking for consistency, especially lately. And we're also seeing a lot of people that are in the market with 401ks and IRAs, but not necessarily trading and investing. So they want to learn how to do it themselves because they're seeing that their broker or advisor is just not cutting it for them. They're struggling with those, and they want to make sure they have enough and be secure during those retirement years. So I'm going to invite you to this class. It's 2 hours locally here in Bloomington. You can text the word investing to the number 210 for 2 seats. You can bring your spouse if you'd like. Text the word investing to the number 210 for 2 seats and a quick start kit, which will actually help you get started right away. So, Al, you were talking about strategies that the smart money is doing to profit, as you were mentioning with Caterpillar as prices are going down. I want to talk about that in a second, but we have gold and silver that have been showing a lot of strength in the past week or so. Gold in particular up about 6-7%, depending on when you listen to the show here. And actually, since looks like November of this past year, market's up about 19-ish%. So we're showing some strength in gold, which continues to potentially, as we're seeing, the market has been going down some more. Yeah. So that being said, what if somebody is looking for an income strategy and they have areas of interest with especially gold or silver where they want to buy, but also if they have an income strategy in there and what they like to trade is actually going down? What are the strategies to profit as stocks go down?
Well, there are different assets that people can use. And one of the things that we do in our classes is identify really, what you want out of the markets. What's your goal for yourself financially, and then how do we help you get there? When the market is going down, or if you're looking for income, there are strategies that are really designed for income, which means it's something you need to get on a short-term basis. If something is going down in value, can you make money on it? Absolutely. You can use options as a way of generating additional cash. Josh has used the word premium. That's just money that you get. With options, you don't even have to actually own an asset to generate premiums off of it or cash off of it. If something is going down in value, there's an option that will go up in value. If something is going up in value, there's an option that will go up as it goes up. But the great thing about options, which is one of what we call the leveraged asset classes, is that the potential returns are a multiple of what you would get by just holding a stock, for example. If you buy a stock and it goes up maybe 10%, typically the option is going to be up somewhere between 100 and 200%, so you get a potential great return there. But let's say you do want to buy something and it's going down in value. You don't necessarily have to buy it right now. You can use an option to get paid cash, get that premium coming into your account immediately, to wait until the price goes lower where you have a more attractive entry point. You can do that with options. And the reverse is true if you're selling. If you own something and you want to sell it but get a higher price for it, you can get paid cash with an option just to wait until the price goes up. Basically, there are option strategies that will pay you money to wait for a better price, whether you're buying or selling. And you can use options as protection. And when we're seeing the markets like this, when you have these big moves, not only up but down, some big moves down, and typically when something goes down, it goes down much faster than it goes up. What kind of protection do you have? If you were in the market last year, 2022, and you had a retirement account that went down 20 or 25%, were you protected? And if somebody tells you, yeah, you were protected, how in the world were you protected if you had a loss like that? Mm-hmm. And what are you doing now? What are you doing differently this year than you did last year? If you're not doing anything different and we have another down year, what do you think the result's going to be?
Yeah, I think a lot of our listeners right now, Al, are probably like, you know what? We don't have a strategy. We're just sitting there hoping that the time we want to retire, we have enough. And I know you've been having a lot of these conversations, and I have as well, with people that have been coming in, and they're saying, here's what we're hearing from people that are coming to these investing classes. I have a 401k, and it's just not cutting it. Mm-hmm. I like my guy, I like my gal, but I'm not getting anywhere. And they're contributing to it, and what they're seeing is most of their contributions is what the gain that they've had. So it's really good because it's been teaching people how to save. Well, there are strategies to do that yourself. You're not required to have a money manager just hold your money and charge you astronomical fees, which we'll talk about in the next segment. But we really dissect that and introduce you to these techniques and concepts that Al is talking about, especially with options in these investing classes. And I do want to invite people. We had a lot of people texting in recently for that class, so congratulations to those of you that got set up. Make sure to pick a date when you text in. So when you text the word investing, you're going to the number 210, you're going to receive a text back with a date. And we're always going to make sure we get the date that works best for you, and also a call, so that way we know how we were hoping we could help you. What are you looking for out of the market? That way we can try to cater these classes to the people that are coming in. So if you do have questions about those 401ks and IRAs, bring those questions in. And that really starts when you start talking with one of our people here on finding a date for the class. So text the word investing to the number 210, and that's for 2 seats for this free investing class, local here in Bloomington. We actually have local classes. So Al, coming up next, we have a lot more to discuss. We didn't really, we just scratched the surface on people that wanted to look for an income strategy, whether it's on top of their job or they want to dial back from work at one point and they want to be able to still have an income strategy during those retirement years. So I want to continue talking about that. But a lot of people are probably thinking, hey, stocks are still expensive. I can't really get into the market. Let's talk about the strategies to use smaller amounts of money to get in there to have an income strategy. Coming up next, text the word investing to the number 210 for 2 seats for this free investing class. This is Josh and Al, Investing and Trading Live. We'll be right back.